All right. I don't want to keep too much uncomfortable silence here before I start the live stream. We've got everybody, everybody's mother, everybody's brother, everybody's grandma and grandpa in here tonight. So this is awesome. We will give it a few seconds anyway and let the group come in. Welcome to everybody. Happy Friday evening to you. We're back on regular schedule. Hope everybody had a great week. It was interesting, to say the least. Obviously, we'll strike up some discussion on a lot of different things. Today was about 5 investing days all in one, to be honest with you. I'm probably the only guy in the investing community that is a little bit disappointed I didn't take profit today. Settled back a little bit, vaporized about $1,000 at the end of the day. Was up about $3,000 today. So up pretty nice. Vaporized it back to 2,000. But pretty good. Held true, certainly through the volatility. Was happy to do so. If you guys could throw the first thumbs up in the thread, I just have a ton of content and channel creators here to call out this evening for sure. But give me your thumbs up and make sure. I think we're good. I see Chris Cobian giving me the hook 'em horns. But anyway, some folks are making their way into the Independent Investor Channel live stream for the first time. One in particular, I'm going to get to a new investor question. But there's certainly enough content that was created this week to really not have any lack of discussion points for this evening. But for you guys that are new to the channel, my name is Ryan. The Independent Investor Channel has been on YouTube for about, I guess, 2.5 years. Some real exciting stuff going on the channel right now. I'm engaged in a full out onslaught of YouTube right now, doing daily uploads, and I'm liking it. It was something that I said that I wouldn't do previously on the channel, just because when you start learning YouTube, you're kind of finding your rope a little bit. And I think I've got J Mac Investing here in the group, and Gen X Dividend Investor, as well as Financial Investor and Average Joe Investing I saw pop in, as well as a couple folks that I recognized their thumbnail, but I wasn't sure where. I've got Hidden Freedom Investing. I certainly want to give those guys a shout out as well. And then I've got one of the moderators who I recognize, GW Life TV, who is a frequent comment offerer in the Facebook group. But the purpose of the live stream is to come on here for a couple hours. And I don't mean to belinger a point, but there is some value in opening the dialogue up to just a fantastic community of people from a lot of different perspectives. I know I was speaking to Mr. Bob Wright, who comes on every Friday to support the message. And it was kind of interesting. I touched on a little bit of a nerve. I don't care. The Robinhood video from this week was meant to offer an honest opinion and a review of how necessary that platform is. And trust me, there's no amnesty as far as I'm concerned, as far as your loyalty with your broker. Okay, I'm no different. I've been with Merrill Edge now going on, or Bank of America going on 20 years. I've been with those guys, and they're just as subject to scrutiny than anybody. And I think the whole point to that is not to offend people who are using the platform. That's not the point. The point is, in an ever-changing environment that we have right now, you guys have got to keep your eye on the prize. And the prize is such that it's becoming more and more attractive to be an investor. And for you guys that are fairly new to the investing landscape, and you're looking to get your feet wet, and you're looking at answering some of those preliminary questions, what account should I go with? What preliminary product should I be looking at as I start to explore the landscape? I don't think it's ever been a more exciting time. I wish we had a little bit more of a conducive market to new folks stepping in and having a lot of upside potential. Now, when we do end up getting this inevitable turn back in the market, or some sort of correction, or bear market, or an extended recession of sort, when that does happen, if it does happen in the short, medium, or long term, I don't know. But that will be the time where I'm beating the drum a little bit more on YouTube, providing that insight to investors. I just think that there's a little bit of catch 22 right now. It's very easy to become excited about the stock market, and uh, YouTube is flooded. You've got everybody and their mother now putting, hey, here's my dividend portfolio. Here's my dividend portfolio. It's video after video after video. And that's great. Slight bit of saturation, but I think a lot of it can be somewhat misleading, in that you have a bunch of people that are throwing content online saying, this is wonderful. All I've got to do is trip and fall into these 10 stocks. AT&T, Johnson and Johnson, AbbVie. It's the same portfolio, Verizon, over and over and over again. And we're kind of regurgitating the same portfolio out there. Here's the thing, guys. There's nothing wrong with those holdings. I own most of them. Okay. I just want to make sure that we are going through this current environment with some caution. I think, in one word, we still need to be cautious. I was not encouraged by today's action in the market, to be honest. I got to catch the last 2 hours of the market, and that had already been where the melt up was. Then, of course, we adjusted back from 517 back to about 319, where it settled for the day on the Dow. S&P was about the same amount of percentage up today, but I wasn't necessarily encouraged. Obviously, the news of the day was the China trade deal. I don't want to make a habit of coming onto YouTube and regurgitating the news of the day. There's plenty of other YouTube channels, not to name names, that do that. I don't do that, but it is worth mentioning that came up right at the close of the market today. And I was not encouraged. I think it's a step in the right direction. I think a step in the wrong direction would have been tariffs going into force next week. I think that would have been a step backwards. So from that perspective, I think it's good. I just wasn't that encouraged with nothing's been written with phase-in process, etc. So it'll be interesting to monitor the situation going forward and see how this affects our money going forward. I actually think, and this is just for entertainment, guys. You come onto the Independent Investor channel to get one opinion at best from me. Now, there's multiple people in here that are going to provide their opinion about what they think is going to happen over the next 3 months into the year's end. I think we're going to end the year on a high note. That's just my perspective. Now, the verdict is out as far as starting 2019 or 2020 next year, January. Next year is going to be interesting, to say the least. But I think, if nothing else, this provided not a headwind to the market, but certainly a little bit of tailwind to the market for the remainder of this year. I think it's probably, it'll be kind of a lot of the same, but there's going to be some reasons to buy this market now. So I think that's encouraging. I'm still holding true to my allocation right now, which is about my optimal allocation: 70% equities, 20% cash, and 10% fixed equities right now, for just an allocation, just to kind of give you guys an idea of where I'm allocated. Probably a little bit heavier equities weighting, not in accordance with any of the models that I have for an aggressive risk tolerance to the stock market, but that's what I have right now. And that's the truth of it. I think I'm 71, 19, whatever, to be exact, and 9 to be exact. But continuing to do my research. Haven't really been doing a whole lot of activity this October. That's indicative of the generated profit within my account right now. I don't think I've sold any stock at all during the month of October. Now, We ended the month of September with a couple figures I'll throw at you now. I'm fairly proud of those. I just went through dividends in my portfolio. The bulk of my dividend payouts are every 3 months. So you'll see an uptick where I'll go from about $245 in a month all the way up to flirting with 800. So I just went through September and it was one of those big payout months, which settled out from September 1 until September 30th at $785 and some odd cents. So it was a really, really encouraging month. I've got the projections pulled up. That's kind of what I was reviewing before we came onto the live stream tonight. And I'm projected for about $5,000 per year, which is exciting. I mean, you forecast that out over the next 10 years. That's 50 grand of dividend income. That is fantastic. It's amazing that there's that prospect there. Now, the projections, I think, are a little bit conservative in that it doesn't account for dividend increases, new additions, new shares that I could add to the portfolio and try to infuse that dividend income within the portfolio. So, but that's what the projections come out with. And hey, 50 grand for doing absolutely nothing, I'll take it. Okay. Just one of the very few, one of many avenues in the stock market that are worth getting excited about. And I think that's the cool part about some of the new folks that have made their way in here. And hopefully we're getting them excited about the prospects of investing and what investing could potentially mean for those folks, especially if you're getting started younger. You know, if you're a little bit later in life right now, I think you're probably going through the same deliberation as me in questioning how much upside potential we may have going forward, especially moving into 2020. But we will see how it plays out. We always live to fight another day. It's always interesting. Whatever you think is going to happen probably will not happen in the stock market. Always keeps you humble and it always keeps you on your toes. But for the time being, it's good to be an investor. All right. So welcome to the channel. Again, I just want to call out the channel creators that have made their way in here. Gen X Dividend Investor just released a new title today, which is chronicling one of his portfolio holdings, which is Starbucks, which got my attention. I thought that was really interesting. And I'm looking forward to that. So again, with the Gen X products that's being thrown out there, go check out the channel. Hopefully the little bit of infusing that we put out here, we get about 1,000 views on the retake. And I think folks who have been with me for a long time, I think they respect at least my referral, and hopefully that's helping build your channel. I look at you as one of the community, as I do with Jason. JMac Investing is also in the group here. You guys are all kind of part of the family, and you're doing your own thing. That's great. But I'm just the guy to stoke up a conversation about investing because, well, I just happen to love this topic. I really do. I really look forward to this to this couple hours opportunity to come onto YouTube and share my passion and bounce ideas off this file. I see a lot of folks in here that I want to take a time to recognize and thank for taking their time out. So we've got a little bit of chai tea tonight. So again, when that happens, I'm usually pretty fired up and can usually keep my voice for about 2 hours. So welcome to everybody. I really appreciate y'all's time. Let me cruise up here and I'm going to start calling some folks out and see if I can't get some of these questions I did earmark for the stream tonight. They were really good. But Bob always kicks in here, and I just want to take the time to thank Bob. We got into, he came on and left a comment and apologized for disagreeing with me. We can get something straight right now. I love everybody, whether or not they have problems with the way I invest. It's not perfect, and it's open to scrutiny. And if you're using a product, see, that's the interesting thing is I don't use Robinhood. Okay. So my scrutiny is based on an outsider's perspective that has done research. My fear is this. Okay. It's convenient for me to have an opinion about a platform like Robinhood when I'm not a user, but I understand the impact, perhaps maybe a little bit deeper than the average bear, with regard to new investors who is their target audience, who are downloading that application and may not understand the tax implication. Now, I understand that it's individuals' responsibility to do just that. But here's the thing, they have the ability to just wash their hands of all that obligation and put all of that responsibility on the individual investor. And I question how much damage is being done to a certain percentage of the 6 million users who are on that platform who don't understand the tax implication of pushing a button 300 times to enjoy the very benefit that they exploit, and that is free entry and exit on their platform. So it's one of those things that can really be one of those things that people would join the platform for, and then it would kind of bite them in the backside when they figure out that doing their trading in a taxable brokerage account, especially if they're a new investor, it's safe for me to assume that they probably have not even looked at the prospects of having a Roth IRA, a good retirement account, started first, right? So some of the folks came on and said, "Look, I really like Robinhood as my broker, but I'm max funding my Roth IRA account, and the Robinhood is my additional supplement to my max funded retirement account." Okay, you can choose your broker taxable brokerage account from wherever. I think I've got about four right now. But I'm very disciplined in those accounts, and that I don't do a lot of trading. I don't do any, quite frankly. I'm very careful with the investments that I take, and I try to get those into a long-term category when I buy those assets in there. All right. But I appreciated the conversation we had this week. I just thought it was kind of funny. Hey man, I usually agree with everything you said, but I'm going to disagree with you here. And you got to feel free to do that. And your perspectives are valuable for somebody who comes on and reads that as a tutorial, because as a user of the platform, those reviews are invaluable. They're invaluable to the people that we're looking to reach. And if somebody reads that and says, wow, this is really interesting, this individual likes it, Ryan's saying, hey, look out for these attributes. I think the discerning customer will look at that and really get some value out of it. And then they can make a little bit more of an educated decision about their platform, because they're more aware of the specifics that each platform have to offer. So, and any more in the landscape when you're looking to choose the account, or looking to choose what broker you want to go with, there's very little room. There's really not a whole lot of concession that you should have to take anymore when you're choosing your broker. So lots of features. All the majors are fighting for this business right now. I would just I would just offer this one warning. Okay. Nothing is too good to be true. So I just saw J Mac came out with the investing video that's covering Fidelity, which is his broker. Just make sure that you're not opting into these major brokers just for the free entry and exit, only to to subject your account to a managed program, because I'm quite certain that behind the scenes they're looking for a way to supplement or substitute for that lost revenue on the stock sale side, right, for their entry and exits. So whether or not they tick up their management expense or their annual expenses every year, their dollar cost average fees. So really an exercise that each and every one of you guys should deploy at least once to get you that awareness, is to pull the statement, whether it be a quarterly or the annual statement, is probably the best product that you can pull and put some eyes on, and make sure that those debits from your account aren't taking place, because a lot of major brokers are absolutely doing that. All right. So let me scroll on down here. Me and Bob went back and forth at the beginning of the live stream. It was good. I appreciate that conversation. It was pretty good. He says, I like the fact that I can disagree and still have a good discussion. That's correct. I always keep my eye on who that could potentially affect making a more informed decision on the platform. So that's really our aim there. Um, I've got Avi A in the group. Always enjoy the live to kick off the weekend. Absolutely. Glad to do it. Antonis Urbanus has made their way into the group. Says, "Hi, I'm a new in investing, and I've already maxed out my TSFA. So not to assume anything, but I assume this is a Canadian investor here for this year. I'm thinking about next year. Should I invest my TSFA limit as quick as possible, or be patient and invest only 500 a month?" 500 a month is not something to say only. That's a pretty good dollar cost average schedule if you're able to maintain that. I've done both, and I've done max funding in January for the last 3 or 4 years. And I think the verdict is out whether or not I've benefited. The school of thought is that you put that money in there and you're able to gain the full extent of the interest over the course of that year by putting it in there early. And by dollar cost averaging, you're losing out on that interest that you would have made up front. Great. In theory, that makes somewhat of sense. I actually like the prospects of trickling your money in through a true dollar cost average program, or the hybrid version of the dollar cost average, where you're strategically buying those shares with that $500. You fund the account and keep it in the money market until you want to make the buy, and try to make those buys. I mean, this week was a perfect example. The time to do your strategic buying was earlier on in the week when we had those down days. You could have injected that $500 on a dollar cost average schedule, and you're kind of making sure that you're not putting a huge block of money to work in the stock market in January. And I've kind of mentioned this before. I think typically, in my experience, I've seen, I don't know what it is about the holidays, but it's good for the market. I don't know what it is. And I know you're going to say, well, oh, come on, simple, Ryan. Everybody's out blowing money that they don't have to buy gifts for everybody. Yeah, I don't know. I think sentiment has a lot to do with it toward the year end. I think there's probably some large strategic movement of money repositioning before the tax year's end, that type of thing. Some a little bit more risk on, a little bit more animal spirits, I think, from the investors who are looking to cap up that year over year performance. Right, that means everything to the money managers. But just think about it. If you're stepping into the market in January and you're coming into the with $6,000 right up front, and we take a real haircut in January, which I've been subject to this before. So I guess what I'm getting at is I may not be in such a rush next year. I don't see any reason to rush to this market. I don't. I think 2020 is going to be very interesting. I think the disciplined investor is going to win out. I do. I think those investors who have taken a cautious approach, whether it be over the last couple years in preparation for more volatility, I think will probably win out. I think putting yourself in a position to scale into the market as it draws back will be a strategic advantage for investors of all type, beginning, seasoned investors. A lot of the high income, I saw something today on the news that mentioned that a lot of the high income earners and a lot of the high portfolios that some of the hedge funds are working and some of the money managers are representing are keeping a lot of cash on the side right now and are comfortable doing so. And I think there's an inherent lesson in that. I think if you can deploy some caution, remember, guys, the stock market just is what it is. Okay. And I think over the long term, it really has a lot of potential to pay a lot of people back if you're patient and disciplined. I think the key for a lot of people is identifying how much risk they're willing to take on without taking on too much. Okay. And I think that's going to be the posture for me over the next couple years until I get some indication that I can visually look at the stock market and say, okay, now we're saying something. Now we're 20% off the highs. We were touching right up against and some interesting fundamentals today. Excuse me, not fundamentals. Some interesting technicals with regard to the charting. which calls for the market to actually continue up. And that's where I kind of get my idea that maybe over the next couple months, we may have a little bit of a drift upward as well. But the verdict is out as we step into 2020 for sure. But hopefully that gives you some insight on where I'm having the same deliberation myself. But welcome to the channel. Thank you so much for posing your question to me in the live stream. I really appreciate it. Hopefully that helps you. I just don't think that there's any reason about pushing $6,000 into the market all at once. I would strategically buy the market. I think that's the best way to make sure that you're making those small injects every month and making sure that you're getting better buy points as it comes back on the red days. That's what I'm probably going to do with my dollar cost average schedule. So awesome. That was a great question. Thank you for offering it for me. So it offers his portfolio consists of 30 stocks, mostly dividend, diversified 40% Canada, 40% USA, and 20 international. Good stuff. I appreciate that. Adriana Aristobal says, waiting for you. Greetings from Miami. It's great to have you as well. She's been with me for a long time, and it's great to see you. Thank you for making your way into the live stream tonight, supporting the message. Honestly, I can't thank you guys enough. I wouldn't trade my subscriber base for anything. I'm humbled. I'm glad to do this, and I look forward to it. I'm really happy to offer this live stream every week. K2 says, your thoughts on today's market. I'm not going to belinger the point. I was mixed a little bit. You know, when you're up $3,000 and you've got as much experience as I do, I'm kind of not second guessing of the market, but when I heard that it was going to be based on news at the end of the day, I thought for sure we would come back, and that's exactly what we did. So my instinct just came out with the video this week about natural instinct. Sometimes it's right, sometimes it's not. The mechanical deliberation aspect of my decision making kicked in today, and I held true. I didn't make any type of buys, any type of sells. Excuse me. There was no profit taking. As a matter of fact, I haven't done any profit taking for the entire month of October. So that's just what I've felt has been prudent thus far. And I'm okay with that. You know, the money every single day toward those ex-dividend dates or days that we're marching toward more of that, generating some of that dividend income that I disclosed to you guys toward the top of the stream. And that's exciting. You know, sometimes the best moves that you can make, the majority of the time, doing nothing is probably the best move that you can possibly make. And if you're tempted to make those moves way too frequently, just don't watch the market. But I'd like to see you guys get to a point where you're able to monitor the market and not react through that natural instinct that you want to get. Oh my gosh, the market's up 500. You know, I've got to sell everything right now. That type of thing. We want to try to stray away from that that reactive type of mentality in the market. So anyway, but my thoughts on today's market, it'll be interesting to see where it goes next week. I really do think we are going to have a positive remainder of 2019. I don't mean to be negative on the news that came out at the end of the day today. I think it was encouraging. I would rather hear something like that. It was surprising to me. I'd rather hear of that progress, as little as I thought that there was in what was disclosed, than having tariffs and getting back into this tit for tat with China. I don't think anything comes out of that. I think we've had enough of that. I think it's put adequate pressure on them to bring them to the table. They've done that, and I think now is the time to negotiate. I'm just, the verdict is still out whether or not we were able to negotiate a good deal for us and for them, whatever it may be. So we'll see what ends up getting to print. We're a month away from actually having the deal signed anyway. I think it's going to be signed in Chile, South America, I believe. So we'll keep our eyes on that and continue to monitor it as we progress toward a finalized signed deal. And then, just like any negotiation, both sides have to have to honor the deal. So there's always that. Okay. So don't read into it too much. I just look at a market that's bumping up against an all-time high right now, and I would still fall back to encouraging everybody to look at the prospect of being cautious. All right. God, chai tea is so good. Oh my goodness. All right. So Avi A hit me up with a ticker symbol here to take a look at. And there's an inherent lesson for everybody that comes in here. Definitely want to pay attention to the expense ratio. That's something that I kind of do naturally. My eyes kind of gravitate toward the dividend yield, the price to earnings ratio, and the expense over any type of fund like that. I don't know if it's a mutual fund. I believe that it is. It's rated very, very high. Its performance is pretty good. So there may be some risk reward there, but by taking on that higher expense, but that 2% that you're just giving away right off the top, you need to make sure and look at the cost basis if you're going to enter into a product like that. I would, I steer away from that stuff personally. I do. I had Avi look at the comparison between the Vanguard's ETF for utilities as opposed to the mutual fund UTG. So you guys are willing to go look at that for yourself. 11 and change on the performance. So since inception, so fairly impressive on that. But I think when you're giving away those 2 bits of percentage, I think it's an example of one of those products that may not be completely beneficial to the investor. Okay, somebody else is going to be benefiting from that, right? You're the one taking the risk, and then somebody is taking 2% off of that product, no matter what that product does. You see what I mean? That expense ratio doesn't fluctuate. And that's my big knock on mutual funds. I think mutual funds are somewhat of a thing in the past where you can opt for those passive products or maybe even some strategic products in the ETF field or index fund field and enjoy that low expense and also enjoy some fairly decent rates of return. And they may not from year to year outperform or perform at the clip of a mutual fund, but you have to remember it's a year over year, decade over decade game. So if you're constantly nudging up against matching the market, matching the market, matching the market, and then one year comes along where the money managers have an off year and you're really deficient in that mutual fund, that can really drag the overall performance of that. And I would almost just rather opt for that passive uh, exposure to the stock market at a low expense and kind of give you a little bit more guarantee and a little bit less reliant upon the active managers. Okay. That was a really, really good comment. There was an inherent lesson in that whole thing. And that's to look at the expense. And that's a large reason why index funds and ETFs make up the passive bulk of my investment portfolio. I am not an owner of one single mutual fund, and I've done quite well without them. I'm fine, and I sleep well at night as well. So it was an old girlfriend that I broke up with, and I've never missed ever. All right, that's my thoughts on mutual funds, and I'm sticking to it. I've got good friend of the channel, All Good, who's coming in, supporting, leaving comments every single video I leave. I really appreciate that. That is awesome. I really appreciate you and great to see you tonight. I saw that you had picked up some 3M. How'd you guys like industrials today? Wow. Jesus. It's the second high. It's the highest exposure that I have in my portfolio, around 22,000 total. And I wouldn't normally choose to have my number one sector as industrials. It's just that not only do I see value on the industrial side of the house, the true plays, but also the defensive sector. Um, my big three, my favorites: Lockheed Martin, Northrop Grumman, and Raytheon. Those are my favorites. There's a couple others that I would throw in there that are a little bit less known. But I just think there's so much value right now in industrials. One stock that I have never owned before is Cummins. On evaluation, Cummins looks attractive. I was doing some combing over of some stocks based on valuation, and Cummins jumped out at me for sure. But nice day in Caterpillar today. Obviously, 3M had a great day finally. Still in deep water with 3M. That's fine. I disclosed to you guys that I took another 8 shares on it, so I think I'm sitting at around 20 and change in 3M right now. Of course, UTX, Honeywell. So everything there did quite well. General Electric had a nice little nod there, so it's crawling out of the dungeon finally. That's a good sign. Um, John Deere absolutely stuck out to me today. I don't know why some of these are slipping my mind, but yeah, um, industrials really looked quite good right now. I think the best sectors right now to take a look at, tech and the defensive, as well as financials. Financials also had a very good day today. The defense subsector had a very poor day today, as well as some of the worst sectors that I would be kind of careful on right now. I'm actually tempted to take some profit in utilities right now. Utilities had a poor day. I don't know if it had to do with the situation out in, I think it's California, and I think one of the utilities out there killed power to help facilitate or to help prohibit fire growth out there in California. And I don't know if that had anything to do with it. But utilities have had quite a good run up, as have staples. So those are the two sectors I would look to, look for some underperformance in. That's just what I see. That's my perspective. Um, Whereas my favorite sectors in tech, financials, industrials, and I would throw healthcare in there as well, as being some of my absolute favorites. I think the screaming buy on the stocks to own forever right now, without a doubt, is Johnson and Johnson. I really do. I know there's some folks in the group that would rather seek out their healthcare exposure elsewhere with some of the pending litigation that Johnson and Johnson has. But historically, compared to itself, Johnson and Johnson is trading at a severely discounted PE. Price is good. I think over the last year, I think it's up about 2%. So it's drastically underperformed the market. But with a 2.9% dividend yield, it's worth looking at. Looking at it will cost you nothing. Okay. I actually considered boosting my position in a day. The only thing that kept me back is the discipline that I did not want to buy on such a severe up day. I wanted to monitor next Tuesday. So I gave myself the option to continue. I have a 22 share position in Johnson and Johnson, but right now, pretty attractive, along with my other holdings. Merck obviously is a great stock. It's not one that I own right now. I do own Pfizer, in the Dow components. But and then of course I stepped back in with a smaller position, 10 shares of Medtronic, on the downturn, and then of course finally ABBV, for the dividend growth, the dividend aristocrat, of course, one of our favorites when we're talking about some of the quality companies out there. But that's kind of what I'm seeing on the landscape. I think technology is one of those sectors that it's my favorite. Technology is number one. And I think over the long term, I think I will have benefited by always keeping a nice, strong stake in the technology sector. And that's typically what I aim for. I've been very, very surprised at the performance of Apple computers. Very surprised. I got lucky. I really did. I'm up huge. Great company. Price targets have increased from here. The charts look good. It's actually on a year-to-year basis right at where it was 1 year ago, if you can believe it. It's done a huge round turn or a round trip all the way down, and now it's kind of all the way back up, which actually is quite favorable. From a technical perspective, it looks quite good. can't foresee owning the stock here, but if you had always wanted to buy Apple, it's one of those stocks that I contend also with Johnson and Johnson, one of those stocks that you can buy and hold forever. I know a lot of folks don't like when I say that. I think a lot of folks would prefer to own Microsoft as opposed to Apple. I disagree. I think the products that Apple comes out with are far superior to the Microsoft products, the Surface Pro. They're very good, but the Apple computer, I think you're buying a little bit more into the ecosystem and the services business that they have, and I think for the most part they don't get enough love, to be honest with you. So, been really interesting to watch. I'm happy. I own about 44 shares of Apple right now. So it's the biggest tech position that I have right now. I could check to see. I'm fairly certain that it's a top 10 position for me. But anyway, Canine's in here, says ready for the drop and the deal does not come. It's interesting. There's a lot of things that can go wrong. I think it's just going to be an insufficient deal. I think there's a lot of things going on right now that are putting some pressure on us to make a deal and putting pressure on them to make a deal. So I think it's about time. And I don't think either side is going to get everything that they want. Uh, so we will see what happens. I'm optimistic. If it provides a buying opportunity, I mean, what's more what's more possible from here? That the market continues up 10% or that it's down 10% for the year's end? I think either one of them could happen. So if it's down 10%, there's your buying opportunity. If it goes up 10%, well, there's your melt up at the year's end, and you get your opportunity next year, January 2020. Who knows? We'll see what happens. But still holding true on the allocation that makes sense to me. I've already disclosed that to you guys, but if there was going to be any type of scrutiny put on the portfolio, I think now is the time to do just that. Okay. But I hear you. I'm always looking for those opportunities. I don't know if I've just been off my game this month, but I just really haven't been feeling it. I haven't been feeling putting new capital to risk right here. That's all. And I'm okay with that. I think China's just stalling. I would be surprised if they actually make a good deal anytime soon. That's from Bob Wright. Yeah, I just have offered my comments. Some talk is better than no talk, I think, at this point. So we'll see what shakes. 3M, my number one want, K97 says, waiting for that perfect entry at 140. Awesome company. It is an awesome company. It is absolutely one of those, I refer to the portfolio cornerstones. That's one of them. It's a company that I had wanted to invest in so poorly that I bought it in an undisciplined manner. To be quite honest with you, it was a little bit expensive, and then it had a bad quarter. So I'm not going to beat myself up over it. I've done the right thing, and I became an investor, and I've owned it ever since. And I've since almost doubled up the position since I've owned it. Sitting on 20 and change right now. 20 shares and change in 3M. And 3M is one of those companies. It's a diversified company within the company. So it's an easy company for a new investor. If you wanted to dabble in the single stock arena, 3M, those big blue chips are the ones. You don't want to look much past that. Don't try to figure stuff out. Don't do what I do and look through. I was looking through the value plays right now, and there's some of these stocks that you guys may or may not have looked at. ING being the top of the list. UBS is another one. Royal Bank of Scotland, RBS, interesting enough. TD Ameritrade. How about looking at that with the reduction in their free trades? That's interesting. AMTD is the ticker symbol. FITB. And IX, which is a Japanese financier company. On a valuation perspective, I've got some other stuff. Both of the big insurers, Prudential and MetLife, interesting. I've already mentioned Cummins. Citigroup, I've owned for a long time. On valuation, to be honest with you, I own all the major banks, but the financial sector may start to work here. American Airlines, General Motors, when it comes out of this strike situation that they have, ticker symbol HMC, Goldman Sachs. That's another interesting one. Goldman Sachs handling the Apple Pay card. They're the backer of that, so interesting enough. And then finally, Morgan Stanley, which I just don't have room in the portfolio for another big bank. I'm good. I own the two big Canadian banks. I would rather own them than I would another US-centric bank, and then Manual Life Financial, which is another regional that I do own. So, so just to offer some of the valuation plays that I was able to comb over in my research before the live stream, that's just kind of what I saw. Some interesting stuff. K97 says, I do have a few shares, looking to pick it up at least in the low 150s. So looking to strategically buy and build the position in the stock. That's really important. GW Life TV is a channel creator and also a member of the Facebook group. They've made their way into the live stream tonight. Appreciate your time. And then right below it, Hidden Freedom Investing, that reversal in 3M this week was something else. There was somebody here who said that they ran a swing trade on 3M this week, which is interesting enough. Swing trades on big blue chip companies is fairly easy. If it doesn't work out, just hold the stock. Pretty simple. And it's not rocket science. You know, it's not like you have to panic yourself out of 3M. It's not going anywhere. It's not that difficult. People make this stuff more difficult than it has to be. I've just been kind of lazy for the last couple of weeks, which is hard for me to say, honestly, because September was such a good month for me with regard to my positions. I was just a little bit more aggressive on taking some positions, and I got I got lucky, I guess. The only way you can render money is if you're willing to take a little shot, So, yeah, we've boosted up the trading revenue for 2019 to around $15,272 rendered in the portfolio this year. That's just in manufactured trading revenue. So that's realized profit. Okay. So we've got some unrealized loss in the portfolio. I declared that, I think, a couple weeks ago. But the realized profit, I don't typically ever sell a stock unless I'm selling it for a profit. That's a kind of a good rule to abide by. If you're going to sell a stock, sell when I get that question all the time. Ryan, when do I sell a stock? Well, I don't know, when you can make money. Keep it simple, guys. It's not that difficult, okay? I've got one of my favorites in here. I got Gen X Dividend Investors made his way into the channel as well. Says hello to everybody, AVA. Let's go. I concur. I've got a good friend of mine, Greg Cami, in the group. Hello, everyone from Fresno. Awesome. That's I think that's Fresno. Is it California? He put CO. I think he's from California. I'm pretty sure he is. I remember funny stuff like that. I've got Mike O hits me up with a question here. Hey, Ryan, how do you feel about holding gold? It's funny you mentioned that. I just went on and Provident Metals is my favorite website to do my searching, and I don't own any right now outside of just a few collectible pieces, etc., whatever. But as far as investment, I think it's worth holding gold, but I'm very careful. I don't think gold is an investment. you know, if you're looking to buy gold and you're looking to sell it for a profit, yes, okay, that falls into the definition of an investment. But I would look at accumulating gold as a way of accumulating um, the goal with the intent of holding it forever, indefinitely. And I would want to amass that section of the portfolio in a way that was divisible. That would be important to me. If I was going to hold physical gold, obviously there is some safeguarding responsibility that you would have. If I did ever bought any type of gold, I would abide by that rule. I would not disclose that through YouTube. No way. I don't mind with the money aspect of it so much, but gold, a little different. I don't think that that's something that needs to be openly disclosed, and I think it's part of the responsibility piece that falls under the safeguarding aspect. I mean, everybody says, wow, it'd be great to own some gold bars, I guess, but they don't think about how important it is to have a safe that's bolted down, that's insured, fireproof, this and that, that can move from location to location if you do move frequently, etc. There's a whole host of things that come with that safeguarding responsibility for owning gold. With all that aside, I like the prospect of owning both gold and silver in multiple denominations. What I mean by that is if you can own the tenths and the quarters and the halves and the full ounces, coinage, bars, specialty pieces, etc. And when I start to get into some of the specialty pieces, I just don't have the expertise and knowledge to know what I'm looking at. I have enough knowledge to look at it like on a Provident website and feel like I'm kind of paying a premium for those products. And I always feel like there's something better out there. Like there's probably collections that could be bought from a private perspective if you knew what you were looking at, and you wouldn't have to pay a whole lot more than spot value at the time that you purchase the precious metal. So does that make sense to you guys? I'm currently not a big precious metal investor. I'm interested, I am, but I just do not feel that confident in my ability right now to put a large chunk and say, okay, I'm going to take 25,000 bucks and put it into this right now. I don't feel comfortable with that, so therefore I don't do it. But it's always a good idea. 5%, 10% on the high side, 5% on the low side devoted. That's the rule of thumb. Whoop-de-doo. Okay, that's the cliche that everybody talks about. I currently have 0. So, all right. Good stuff. Right below there, got Dividend, JMac Investing here in the group. That's cool. I appreciate you popping in here and saying hello. So Hidden Freedom Investing, hi Gen X Investor. You got the Starbucks video, so you got some call outs there for sure. I got Dave with Average Joe Investing. Very, very cool. Have a great show, everyone. I'm in Ryan's old stomping grounds of Staten Island, so I won't be around much tonight. That's really cool, man. Good stuff. Yeah, I miss New York. There's a heck of an energy up there in New York. New York's good with me, man, for sure. All those pictures that I have on my YouTube videos, I took those from the inside of the New York Stock Exchange. Except for the last picture. Nobody's got back to me and told me where that picture's from. So at the end of every one of my videos, I have a picture there, and that one's not from New York. The rest of them are, obviously. So, but anyway, cruising through here, cruising through the comments. I got Eric Weber in the group here. Appreciate you coming on. Has deep dive video just dropped. I've got Mr. Jared Odell in the group. Hello to you. Appreciate you coming on here. Sure was a wild day. It was. It's amazing how you can be like, hey, I only made $2,000 today. It was kind of weird seeing $1,000 evaporate in a matter of like 25 minutes. I was kind of like, Jesus, close, close. I I don't want you to stay open anymore. This is crazy. But anyway, who needs Kramer when you have Gen X? Oh, no doubt about it. Good stuff. I've got Kian Tapark, hi from South Korea. Very cool. Wow, that's amazing. Other end of the world over there, man. It's an area of the world I've never been to, but I guess that's part of the beauty of the whole thing is bringing people together on YouTube. I think it's great. I always feel like I'm talking from a very, very, I don't want to say jaded, but it is as an individual opinion coming from the United States. And I'm always interested in the international consumers of the message on the Independent Investor channel, how much value they're getting. Some of these products that we talk about are not available from an international perspective, but it's just amazing how a lot of people come on and they say, hey, man, we wouldn't miss the message for anything. I think that's great. I think that's great. And again, thank you for helping us support the message that we're putting through. I think we're reaching a lot of people. We're crawling up toward 20,000 subscribers. I ought to be there in 3 or 4 years. That'd be awesome, and get up to that 20,000 mark. So thanks for all your help and referrals on that. It's good stuff. All right, cruising through, starting with the thumbs up. I appreciate that. That's always nice. I think YouTube appreciates that if I get some thumbs up on the videos. Adam Jones is here in the live stream this evening. Says anyone see the new robots at Walmart? Walmart is going to continue to grow fast in the stock price. Wow, that's really interesting. I appreciate that little tidbit. Um, I tell you what, out of big retailers, brick and mortar retailers, Walmart is right up there at the top. I really miss Target. I really did. I almost pulled the trigger, and I did own it for a small trade, but not as an investment. Man, the valuation on Walmart is tough to justify pulling the trigger on. But yeah, Walmart would be a nice cornerstone in the portfolio for sure for anybody that's looking for a real defensive stock during a downturn for sure. I'm amazed every time we shop at Walmart. you know, we do, and it's amazing to me. Those people are pumping money through that place. It is just amazing how much money those places make. It really is. It's amazing. It's a business that I can relate with, and I think it would be very easy to justify being an investor in Walmart company. And they're more than just the brick and mortars. I mean, they're the boats and everything that come with it. So it's good stuff. Tim Tellers is right below there in the group. Says good evening, everybody. That's awesome. J Mac, Greg says you getting any sleep? He's aiming that at Brent, the financial investor. Good stuff. He's got the new baby. 52-week high today on Target and Walmart. So I just mentioned those two. I get Hidden Freedom is kind of pointing out what I am pointing out. I seemingly remember Target some short time ago at $55. And I wouldn't touch it there. It's just interesting. It's just doubled with that yield is pretty impressive. We missed it. We really did. We missed it. I would have never thought that it would have had that type of performance in this short term, but it has. People enjoy shopping there. I'm one of them. I enjoy Target and I enjoy Walmart, but interesting valuation stretch, and it's not something that I really want to stretch for and reach for something right now. You keep those on your watch list, and you keep them in the back on the back burner. Maybe we get a reduction, and you want to add some portfolio exposure to the particular sector. You can do that. Okay. But anyway, Sean Satterfield says, good evening. Nice to see you. Appreciate you coming on this evening for the live stream. Awesome. Bringing people together on YouTube, the live stream. I love it, man. Larry Massa's in the group, says good evening. Right below that, I think I'm about to get dumped on here. I've got Mr. Christopher Blaine, a good friend of mine, certainly been with me a long, long time. Great to see you, my friend. Great to see you. Hope you're having a great weekend. We've got a 3-day weekend, I believe, here for all the federal workers. Sorry if you don't get Monday off. I'm taking it. So I'll probably be creating content for all you fine people, because that's typically the way I fill my time up a little bit. Been creating a lot of content. I hope you all appreciate that. That does take a little bit more of a concerted effort on the planning side of the house. I'm very, very creative. There's always ideas that I want to put forward. Honestly, when you do daily uploads, you're not going to come out with that home run every single day. So I do try to mix up the content anymore, and I think that's just finding my groove on the Independent Investor channel. I think it's more about consistency on my channel than it is about just coming up with a perfect product. Quite frankly, I don't have time to sit there and build a video like Gen X Dividend. I don't know where he finds the time. I don't know. I haven't figured out a way to find that 25th hour in the day. But I can't do that, and I won't. I absolutely won't. I would rather keep the fire stoked on the channel and keep a 10-15 minute message going out there to the group, and that's just going to be good for me. Not necessarily good for the next person, but I hope the subscriber base appreciates it and are finding some value in that consistent message that I'm trying to put through. So, all right. So let me scroll down here. It's nice to see you, Chris. Thanks for popping in and saying hi. Just been waiting for the stream. Good stuff. GW, I like your channel. I have to check that out. That's great, guys. So if you are tuning into this and you want to check out and start to capture some of these YouTube creators, feel free to do that. You guys know I try my best to offer that shout out on the live stream. I've done it for multiple people and I'll continue to do it. I couldn't believe it. I was going through my stream tonight and I couldn't believe how many dividend portfolios are online. It's like, Jesus Christ, how many of these can I review? Anyway, well, it's all good. Scrolling down here, what time to be alive? Zero commission everywhere. Yeah, so Jason, JMac Investing, the dividend growth channel, has brought to light something it's certainly worth talking about. It's interesting to see all of these chips fall, to be honest with you, and I think it's a huge win. It is. Part of my motivation when I started the channel was that I felt that every single commercial that I saw come on television, and I was with Edward Jones, and I don't mean to talk negatively about a broker that taught me a lot about stocks, but their fees they're crazy. They charge a lot of money for exposure to the market, and when they went over $1 trillion of assets under management, you do the math. I think it shakes out at $40 billion per year for doing nothing. Nothing. They do absolutely nothing for that money. The market, all the individual investors are taking the risk to the market, and companies like that get to sit there and just rake in their money. Now, what is the solution? The solution is to eliminate that middleman, take them out, direct connect yourself to the stock market. Therein lies the need for the independent investing, right? Benefits the individual. Right, wrong, or indifferent, every single dollar that's earned comes back to the individual. There is no middleman. There's no interception of cash. There's no interception via fees, none of that stuff. And I think with some of these major brokerage houses, I really think that's providing a pretty amazing opportunity, that of which I didn't even have up to a couple years ago with Merrill, and I don't. And a few people have asked me, what do you think, Ryan? Do you think Merrill's going to follow suit? I don't. They may surprise me, but I've had a few conversation with those guys at customer service and things like that, and they are they're tough. Gen X, thank you for that. I really appreciate that. Not necessary, but thank you. I really appreciate it. I hope you're getting a good referral base. We need to get you up to 10,000 subscribers, no doubt about it, as quickly as we can, because your content is phenomenal. You ever thought about doing something that Joseph Carlson does with given the short version of the same videos that you do? Just throwing it out there. It just came to my mind, but I don't know how successful he's being with that. But for the folks that want to consume that long 45-minute to an hour content, I think you're better for it. I really do. But a lot of people, you're going to find, the appeal, and to get that base of views to the channel may actually kind of filter folks to the longer videos. If you think about that, that's just an idea. Not to compromise the good work that you're putting into the long videos. But yeah, anyway, I appreciate the support though, man. That's really cool. I'm looking forward to your videos. There's not a lot of folks on YouTube. I mean, my featured channels, I really love everybody on the channel, but I don't spend a lot of time watching other YouTube. I don't have time. I don't. So I don't sit there and spend a lot of my time on YouTube, but I'll selectively pick up a few pieces of content. And yours are amazing. It's like watching a movie. I told you last time I'm going to pop some popcorn next time I catch a Gen X dividend investor video, because they're that freaking good. Really sharp. Anyway, but with the race to the bottom, man, we're sitting in the driver's seat, guys, and it's amazing how everybody in this community, whether or not you realize it or not, you're right where I would insist that you are with your awareness to the products, the opportunity, the prospects of your different avenues that you can go. It's If you don't know enough to be excited about the opportunity, stick around for a while and make it make sense for yourself. Okay. I'll be excited for you, and you may come on and be like, "What the hell's this guy all excited for? I don't get it." But you will. You will. Give it a chance because, man, the opportunity right now is pretty crazy. I know with the quant investing and the algorithmic investing and all that stuff, and I know how it makes it much more of a volatile market to invest in this and that. And at the end of the day, none of that really matters if you're a long-term investor. I mean, just look at the listing. I think Gen X and Dividend Investing and JMac Investing also does a portfolio review every week. I really like that because these guys kind of get it. Like, who cares? Who freaking cares if somebody comes on and says, "I own Goldman Sachs," and people are going to be like, "Wow, I've never heard of that company." No, come on. These are companies that everybody can resonate with. Home Depot, Travelers Insurance. Companies like this, people understand that they're out there. But there was even a time in my life when I didn't look at these companies with the same lens that I look at them now. I look at everything as an investment perspective, everything. And I think the quicker you can evolve to that place where you're kind of looking at that and you're not looking at it blindly, you're just saying, "Wow, Home Depot's got it figured out. How is it that I can become a participant in this company, this fine company?" I'm noticing things about how every store I go into across the United States are all run really, really well. It's part of the reason why I don't invest in Lowe's, to be honest with you, because they don't quite have that wow factor. Now, if you looked at Lowe's and Home Depot and cross compared them and actually did an analysis of both, Lowe's would win out. Lowe's wins out. Okay. But Home Depot just has that it factor. That's and it's pretty cool once you evolve to that place and you start to say, "Man, if I could just become a participant." Now, to J Mac's point, what he's talking about in this race to zero, you can seek your exposure through this as long as your conduit is dubbed a self-directed account. For the guys that are subscribing and the gals that are making their way into the independent investor channel community, do not push that small aspect aside. It's that important because, again, if you're opting for the managed option through every single one of these brokers, you're missing the point. Okay. Opting into a managed program is just like opting into the fee structure that they've disclosed to you. Opting into the self-directed account, if they offer it, is basically like opting out of the fee structure that they can put on you if you agree to enter into a managed situation as opposed to a self-directed program. I can't stress that enough. If you're going to take the risk in the stock market, every dollar for dollar, I want those dollars to be coming back to you, back to you. And I think this race to zero probably has some level of behind the scenes work that's going on, some level of makeup, okay? Where these big companies, man, they're not just going to take out. I think Charles Schwab, it's 8%. I think some of the other ones is a little bit more, but I think I saw Schwab. This was 8% of their bottom line. And by taking that out of the equation, guys, they're going to freaking make it up in other areas. They are. They are. And they can. They can. Why? Because it's already disclosed to you. It's already disclosed. Edward Jones's disclosures is 43 pages. It's one of the videos that I have tucked into the catalog in the archive of the Independent Investor Channel's contents, where I kind of go through the first few pages of how absurd some of the things that you pay for via fees make their way into those disclosures. And basically, the first sentence in any disclosure is, make sure that you read and understand the disclosures based in herein and understand the fees that are charged over your investments. It's basically telling you, if you read this document, you won't invest. So something really, really important, man, it can really, really prohibit your growth. And I think it's an exciting time to be an investor, to your point, Jason. I really do. I'm excited for new investors. I can't necessarily be as excited for myself because, I had to get to a threshold in the account to be eligible for the benefit now that most of you guys have access to for free. That's not to be overstated. It's very, very important. Very important. All right. Good stuff. I don't know how you used to do this, Ryan. It cost me $15 to cross the bridge out here. Yeah, I know you got to sign up for the Easy Pass and you get a local discount. So I think it was like $6. Now to cross the outer bridge or the Verrazano Bridge, I would usually take a GV. So actually, to go across to Manhattan, I take the ferry. You want to take the Staten Island ferry, which is on the top side, there by the Staten Island Yankees, the semi-pro team. Head up there by the courthouse park and take the Staten Island ferry across to Manhattan. It'll drop you right into Battery, and you'll be able to take the subway wherever you want to go. It's pretty cool. I like New York a lot. It'll always be the heart and soul of the independent investor channel, no doubt about it. No doubt. 20 years from now, I will always pay homage to New York City as really given me a lot of insight to looking at things in a lot bigger perspective. New York is just it's there's a lot of action. It's a lot of fun up there for sure. All right. See, I'm doing two opposite no videos 4 weeks. Yeah. I well, yeah, I mean, I don't know. I'm just on a good creative streak right now. I'm proud that last video I came out with. I was the most proud of that video. It's one of my favorites. I said some things in there. I don't know if you guys saw it, but I almost broke down at the end of the video. I did. If you're probably watching it on a television, you can see the point where I kind of catch myself a little bit because I meant what I said, and it's real. Yeah, it's real. Nothing wrong with being real. I think we have too much fake in the world anyway. So it's kind of refreshing when somebody comes along and they're actually real. So, and I know there's a lot of folks in here that feel the same way, no doubt. But he says it's been 4 weeks. I went through that stretch this summer. I just didn't feel like making any content. And that's the cool thing about the YouTube opportunity is that, that would be my one ask if I do ever go through those hiatus periods where I'm just not feeling the content. I 100% have full confidence that my subscriber base would understand that. That's simple. If I want to do daily uploads, I'll do it. If I don't, I won't. That's simple. I haven't changed since day one of this channel, and I don't anticipate changing at all. It'll be funny because I'll be the same person when I have a bigger channel. Schwab has no commission. That's correct. Cesar Nunez is in the group here. That's one of the many. Fidelity was the one that I was really hoping for. Now I'm really being tempted because now I've got a situation where I'm really rooted in with Merrill. And it's not so much the loyalty piece because I think people should be less loyal to their broker. It's just a pain in the rear, to disengage all of the accounts that you have connected and swap over, pay the fees and get paid the fees. And it's just a pain in the neck. And it's kind of irritating to have them flip flopping around. And, pretty soon they may be all at zero commission and then they'll be racing to the zero to nothing on something else. But this has been a long time coming, and I'm excited for new investors. For those, I think JMac invests with Fidelity already. So if you're already there, that's pretty cool. I don't know if Jason is enjoying that incentive threshold with Fidelity in that he gets first free trades anyway. But I know at 25,000 with Merrill, I think you get 30 free trades. That's it. And right now, these brokers are like, with the minimum for to fund the account, it's zero. That's pretty impressive. Yeah, it's good stuff. Good time to be an investor. Really cool. So Greg's asking the financial investor a question. Good stuff. Appreciate that. That's awesome. You guys are all talking to each other. That's awesome. You're tired of hearing me rant on. GW Life, I'm really trying to get away from sharing individual stock holdings. It's tough to do though. Yeah, I mean, they're real popular videos, I guess. I always question how much real I hated doing them. I know how popular they were, and I knew how much people were entertained by them. I've got another channel creator right below. I'm about to give a shout out to Investing with Aaron, but I'll finish my thought. I just don't know how much benefit comes out of that. If there's one person that comes on and buys Marathon Petroleum because I've come onto YouTube and said, "Hey, I'm buying a few shares of Marathon Petroleum." Not one time did I say, "Hey, buy the stock." But what gets misconstrued over YouTube is, "Oh my gosh, Ryan's a killer investor. I've got to invest in the stock because he's investing in the stock." And I just don't know how much benefit comes out of that. No education, no research on their own. Owning a single stock, which means you're not diversified, you're probably not prepared to take it into a downturn, and leverage the position in the way that I did, and that I averaged down the position, made profit on the average down block of shares that I made, and then exited the last block of shares, 40 shares, for another profit. Now I've entered another 40 block on the ledger, and I'm up $150 there already. So I just I want people to be prepared and understand all the risks. And as cliche as that sounds, I think that's the real heartache with that when I had with some of the larger channels that were offering videos like that, is they just maybe they did understand and didn't care that there was a small obligation to understand that there was going to be younger investors who took a piece of just content that came through YouTube and took that content and was like, "Oh my God, next week I'm going to be a freaking millionaire because I can download Robinhood and I can take this advice from this YouTuber who must be a genius, and I can put the two together and I'll never have to work again." So that's the type of damage that I thought was probably going on. And I understand everybody has to make their own decisions. I really do. And there's probably some benefit to come out of making those mistakes and living through them, yada, yada, yada. But is there absolutely no responsibility that comes back on the channel creator? I contend that there is. I do. And I do understand those. I always release those videos, like my stocks to own forever videos, like the top 5 videos to own forever. I don't necessarily think that that's coming up with some sort of needle in a haystack. I always look at it from a perspective of, if somebody comes on to one of those videos and is like, "Wow, Apple computers, I really enjoy their product. That's interesting. I've never really considered investing in any of these companies. I know they all exist, right? Procter and Gamble, J&J, Disney, JP Morgan Chase. Um, I know they exist, but I just never really considered them as an investment, right?" And I want people to understand the psychological piece to that lesson. The psychological piece to that lesson is to start to build a hierarchy of stocks in your mind, or what's better is to build them out via watch list. Have your very, very favorites in the sectors, right? And I can name my top 10 in almost every single sector. Industrials is easy, and I own most of them. I really do. I don't own all 10 of them, but I own a very good exposure rate in my favorites. And I still have some favorites in the industrials that I don't own. John Deere being one of them. Healthcare, Bristol Myers Squibb is another one that I don't own. CVS, another one I don't own. But I think the idea there is that folks start to kind of start from the top echelon, and start to become aware of what's out there in the landscape, and it starts to condition your mind to recognize investment potential in companies that are out there, whereas before you might not have thought about them. I think that's the key takeaway there. But anyway, I do agree with you. I'm trying to get away from it a little bit. I like the portfolio rollouts because Mine are a little bit different in that I don't really prescribe, and it's not me. It's indicative of my portfolio style. Anybody can look at my style and say, okay, well, I don't have a whole lot of growth right now. By definition, I do. I do, but I don't have the Googles and Facebook, and PayPal. Some of the some of the higher valuation stocks, Booking, Holding, Amazon, Nvidia, Netflix. Some of those companies, I don't own them right now, and I don't want to. I don't have any desire. Those may be the first stocks that I pick off if we do get a real downturn. And I'm thinking about strategically opening up another section of the pie within M1 Finance and just building a growth portfolio within there, and kind of doing it that way. That might be kind of a fun way of investing long in those companies, because that's the way you really have to buy those. You really have to buy them and hold them. I don't think Google is going anywhere, although I do believe Google and Facebook on valuation are pretty attractive, to be honest with you. But some of those higher valuation stocks like Booking is my favorite in the discretionary sector, and nobody ever talks about it. And there's a reason. It's because people look at that $2,000 price for per share, and it's like, holy crap, I can't buy that. Well, that's not true. In M1 Finance, you can. So I'd like to pick 10 of my favorite growth stocks and build that portfolio within M1. And that may be just another aspect of my portfolio. You guys know that I've got the sectors, and I've got the ETFs, and I've got the index funds, and I've got the dividend aspect, and I've got the bond aspect, and I've got the cash aspect, and I've got a partridge in a pear tree, and that's about it. I've got most of everything covered. I don't buy options, and I don't foresee myself doing that. Um, but I do cover a lot of basis in the portfolio, so I do like to roll those out and just kind of demonstrate my multiple styles. But I think people appreciate that. So if you're going to talk the talk, I think you should probably walk the walk at some point, in my opinion. So Stephen T's right below there, bought a few shares of BSV for sure. That I own BSV as well. Vanguard ETF on the shorts. Glad to see my position in BWIGX has improved. Right on, Stephen T. That's awesome. Thank you for sharing those tickers. That's awesome. I've got Investing with Aaron, who's left a couple really, really nice comments on my videos. Well thought through. I really appreciate your insights. I really wish I could give a little bit better response, but you got to understand, man, with this daily upload schedule, I spend a lot of time with comments. I really do. So don't hold a grudge, man, if my response is a little bit short. Thank you for your time, and I appreciate you offering those comments. I know people who review those on the thread will benefit for it. But Aaron says, devil's in the detail with the trade mini deal, more details needed. I concur with that. If I read right through that, big whoop-de-doo, what a clown show. I'm a supporter of the administration. Here's the thing. I don't really care if it's a Democrat or Republican in office. I care about my bottom line. And that may seem selfish or whatever, but what is it that you can do for freaking me? Really. And so when I watch that, I watch it from an objective lens, and I'm just like, geez, you didn't say anything, really, you know? Um, I hope something good comes out of it so we can stop talking about it. I really think some of the underlying risk right now, not only geopolitically in the world, is that I think growth is slowing globally, and once it slows to the point where consumer confidence starts to be impacted, consumer spending starts to retract, then the earnings for companies start to retract. We may be already starting this phase, okay? And I know everybody's in euphoria from today because the market was up over 300 points, but I think that's going on right now. I do. And I think it can go on under the surface for many months before we actually start to really see it catch up with the stock market. But the economy itself is actually showing some interesting signs of deterioration, in my opinion. I think you're right on the money with that analysis. I saw the same thing. Yeah. So appreciate you coming in, investing with Aaron. Aaron's got a show as well. So Lots of channel creators here in the live stream tonight. Absolutely. Feel free to kick over and show your support for investing with Aaron as well. Appreciate you coming on, man. Stuff. David Mathis, been with me for many, many moons. Says hello. Appreciate it. Santa Claus Rally. Hidden Freedom Investing says Santa Claus Rally. I think that's right. I can't really put my thumb on it. But last year was a real surprise. It really was. We just got clobbered, and it was kind of a downer for Christmas. That's not really typical. Usually we have pretty good performance historically. Most of the profits actually do happen in the latter part of the year as compared to the first 6 months of the year. Look at it historically. You'll really find an eye opener. It's a good topic for a YouTube video, actually, is to look at the historical performance from January to July and look at it from July to December, to the end of December. It's staggering, actually. So you could have actually went away for the first part of the year and just invested at the end of the year and done quite well doing so. But not advocating for timing the market, but take a look at it. You'll see what I saw. It's interesting. So anyway, I just dumped all my comments on me here. Got some new folks here at the end that I see. Lydia Santiago's toward the end of the community feed here. If you guys know that she's in the group, and you guys can direct some questions toward her as well. She's also one of my featured channels, hailing from the West Coast, the land of the palm trees. Appreciate you coming on, Lydia. Thank you for coming and supporting the message. I'm sorry you're at the end of the feed here, and I didn't get to give you the call out. I got the one and only Doug Whitaker as well. I'd like to see what kind of profit Doug made. I'm scouring through to see if he made his 600% this week. He gives me a lot of content to make jokes about, man. It's all in good fun, but man, that guy's incredible. It's awesome, man. Here I am with my boring portfolio that just kind of floats up here and there, pays me some dividend income, and he's making some killer returns every week. But nah, it's cool. It just goes to show that there's a lot of different ways to succeed in the stock market, and I'm just glad that he's part of my community here. Absolutely. I'm glad to have him. So I want to cruise down here and make sure. Lydia says, still love Roku. I'm ready for earnings season. Fun times in the market. They just got a huge upgrade today. Roku did. Their earnings are off the chart. It was interesting because it was a valuation call on Roku to pick it up here. I was like, wow, Jesus. And again, it's kind of going against my my need to enter into high growth right now. But if you were going to get exposure to streaming, that's where you could potentially look. So, for you folks that are looking for that level of exposure in the streaming services, I'm a happy Roku customer. I like it. I think it's really cool. It's a lot of fun. It's a fun TV viewing experience, in my opinion. So let me cruise back up here, guys. That jumped a bunch of comments on me. So Harris, I think, is defensive company. Yeah, it is. Jason Fever Companies, Mr. Free 33, Amazon Dude, Fire Movement. That's a hell of a comment. Wow. K97, bringing it tonight. Planning needs to come into play when required minimum distributions comes along, though, on the traditional IRA. Good. I'm taking off, tired, not feeling well, man. Get well investing with Aaron. Thank you, man, for making your way on. Appreciate that. You're probably off already, but I'm just now coming across that feed there. I've got Matt Money here in the group. It just saw you. I just came across it. I do apologize, man. If the time difference is such to where you guys can't make it on at the top of the live stream, throw your comment in there early, and I'll give you that shout out, so you're not getting it an hour and a half into the thread. But Matt Money is a channel that I need to check out. It certainly got my attention with a $350,000 portfolio. That's something that will catch my attention, certainly. Not necessarily from a respect perspective or blah, blah. Money doesn't mean that much to me. I'm more interested to see what you're doing about it. And I think you're striking up some following there. and good on you. That's pretty awesome. Working with a six-figure portfolio, closing in on $500,000, that's nothing to sneeze at. I'd kind of like to understand what your fundamental approach to managing that. If you're passive, active, etc. What type of account? How much is tax preserved? You've obviously made your way onto my channel here, and I think you're generating a little bit of a following. I came across your channel just on a feed, and I think you were called out by a Gen X Dividend investor as well, when you guys were trying to plug each other, which is smart. But thank you to you. Thank you for making your way on here. I think one of the comments on your channel was you've got one of the biggest portfolios on YouTube. I might rival you a little bit, but it's great to have you on here. Thanks for taking the time and making your way on here. If you're still in the community, man, I really appreciate it. I'll have to check out your content more. It's kind of cool to see all these folks putting their content on, but yeah, the number only means so much to me. It's kind of one of those things that, if you've got, some Roth money put away, or if you've got some bond exposure, what you're doing in the current exposure with the stock market, what your thoughts are on the market, etc. Those types of things. And the amount that you've been able to grow that wealth as well is another thing that I would be interested in. So really cool stuff. I see hello, my Cammy, which is always interesting. There I see, he always leaves a very, very robust comment every single Friday. I can always rely on Ernest to come on and say hello every week. But it's great to see you. Thanks for coming on, Ernest. I appreciate it, man. Good stuff. That's great, Matt Money. So you guys got a convo going back and forth. I may have to review this thread after the live stream, but let me see if I can catch myself up. I got 50% of my monthly paychecks waiting for that drop. Good stuff. So building cash, it sounds like. I can try to cruise up to the top of this. I'm with Uncle Ian. Been buying 3M. Awesome. Got Altria, J&J, Caterpillar for sure. Again, J&J is right there, right for the picking, no doubt. You've got valuation, price to itself. I would look to price to itself on J&J. You don't need to look anywhere else. You don't need to compare it to the industry or the sector. Yeah, J&J's a good pickup here, for sure. Even with some of the headwind that they've got, I think they've got some of that priced in and baked into the cake. Been a few months since I bought some AbbVie. So I'm sure you picked it up in the 50s. That's a good buy. So really, thanks for disclosing that stuff. I own all those names except for Altria. I can't do it. I can't. There's a lot of people dying right now. And I get it. We shouldn't mix the two. I get it, but I'm opting elsewhere. So I'm not going with Altria, Philip Morris right now. Though that's some potential headwind I don't really want to be stuck holding the bag on. So just continue to monitor it. Obviously, very, very well run companies, very big, very influential. MO being the the domestic version. I understand all the crave behind it, but I just think we're finding out something about those products right now. It's very, very telling. Very telling. All right. Still sticking with IB for my trading. Interactive brokers. Interesting. That's one of the first time that's been mentioned on the Independent Investor channel. Very cool. It doesn't come up very often in my discussion, but thank you. I'm a long-term investor in Robinhood and Acorns aside from my 401k and Roth IRA account. So Hector Mendoza has been with me for a long, long time. Again, super loyal subscriber. And I think that is an indication of somebody who's making it work right there in those two accounts, and probably having a little bit of fun. Acorn seems like it's kind of fun, to be honest with you. But if you're long Robinhood and using it for what I insist investors should at least consider when they're looking at Robinhood, that's responsible. It's not those types of investor like Hector who's using Robinhood in the capacity that he is. I think Nate still uses Robinhood as well. Haven't seen a lot of his videos since then where he's disclosed what account he's using. Maybe he's moved on. I don't know. But for you guys who are just looking at a brokerage option, easy to use, etc., that where you've already filled your retirement account void with somebody else, Robinhood can work. Okay. But it doesn't hurt anybody to point out the obvious deficiencies with the platform, and they are big. They're big. So you can't deny those deficiencies within the platform. All right. When will you guys collab? Who? Gen X and no, we're not collabing just yet. I'm doing everything that I can do to help Gen X Dividend investor grow the channel, and that's where it's at right now. I think his wishes are to kind of grow the channel and the message and really kind of get into the YouTube groove before that happens. And that's the way that's going to roll. All right. 5,000, not bad. Who's got 5,000? Not bad. This is just quite a thread here. This YouTube makes this really hard for me to follow because they drop just a ton of comments on me. I don't know. Okay. I think I'm back to my original spot. Good. All right. So Matt Money, I appreciate you making your way in. Very cool. I think that might be 10 channel creators that are in the live stream tonight. Really good. If you haven't helped support the live stream, at least, man, and Gen X Dividend Investor, you do not have to give me a thumbs up because you've given me a monetary gift that helps support the channel, pay for some of this expensive equipment. That's why I'm lit up like a Christmas tree right now. It's these new LEDs. I've got those links in the description of the videos now. You can see what I've got on Amazon. They're pretty legit. So it makes all the difference. And I like these live streams because I'm using my new microphone. So the sound is actually solved on the live stream. It comes through really, really nice. I'm really happy with the sound and the lighting quality now. So helps to go support that. But if you haven't hit the thumbs up button, please help and do that. I think that makes a difference there on the support of the channel. So if you're still in the live stream and you haven't turned me off, go ahead and hit the thumbs up now because we'll be kind of wrapping it up a little bit. I'm going to try to get to some of these. Have always kept cash on the side. Always makes sense. That's one of the fundamentals that I insist upon. Appreciate you reiterating that, Eric. I just don't think you can go wrong. And again, the criticism of that program is such that you're not getting the full benefit of your money, except blah, blah, blah. What people who say that don't understand is that money is not subjected to risk. And I think people blindly sometimes get overexposed to the stock market and they don't understand that they're overexposed. And it can be a real eye-opener. There's nothing more conducive to luring investors to sleep than a market like this, where you think that day in and day out, it's easy money. Why? Because it is easy money. This is great. This investing thing, this is awesome. Guys like me who have been in the market for a long, long time, we know what it's like to go through 2009, 2010. I went through 2001. Those are the types of things when it's violently acting up and violently going down. It's the flip side of the mentality that you have now, to where it's like, man, this is easy, man. I can swing trade 3M. I can just buy it. It's easy enough. Piece of cake, man. This is easy. I pick up a few shares, skim off a few $100, man. This is the easiest money I ever made. Why? Because it is. All you did was push a button twice. Okay. But the stock market doesn't necessarily always render those types of rewards. And I will contend the last 12 years have been very, very impressive, unprecedented, quite frankly. But I always want to caution investors to understand that it will not be roses forever. It won't. And I know there's people who they don't want to hear me say that. They don't want to hear anyone say that. But that's the reality of it. And the real truth test, whether you're working with a portfolio like myself or like Matt Money, run yourself through that proof test to say, you know what, here we are, calm as can be. Okay. Market's up 300 points. it's tapping on record highs. I probably have 3 months of insurance grace period to really monitor my position, monitor my risk tolerance, monitor my exposure rate in accordance with your risk tolerance. Because if you're young and you're sitting on $350,000, you really don't have to do anything as long as you have the tolerance to watch that portfolio adjust back 30 or 40%. And that's the proof test. All right. Are you in a position to where if that 350, like in my case, if the $350,000 fully exposed to the stock market adjusts back and now I'm looking at, low 200s, do I have a position to benefit from that drawback? Because that's the time where I'm going to be saying, okay, pony up. It's time to really get some capital going to work in the market down 40%. That's going to be my trigger. 40 is going to be my trigger. Okay. 50 is just an added bonus, to be quite honest with you. And people are going to tune into my channel and they're going to be like, you're freaking crazy. The market's going to zero, Ryan. It's going to zero. You're freaking crazy. It's time to dig a hole and you need to become a prepper. Seriously, those people will come out of the woodworks, man. I'm serious. And they'll all be subscribing to all the financial channels and they'll all be spreading hate. Trust me, that's what's going to happen because the mental control that your mind has on you, you're getting conditioned every single day to thinking this is normal. And it's not. It's not normal. It's only normal now. Okay. But when it starts to get cranky, it'll get cranky and it'll remind all investors. It will test even the seasoned investors out there. It really will. And in one word, I'm not meaning to scare you. I'm just saying, use caution. All right. The stock market's not going to save your freaking life. The stock market's not going to morph into something that you want it to be. It's always just going to be. That's it. Okay. Don't make it more than what it is. And right now, I fear that there's a lot of people making it something that they want to be. It's an entity that they can participate in, and they can get automatic success in. That's been true over the short past history. That's been true. Look a little bit further historically and see what those drawdowns have provided with regard to buying opportunity. All right, good stuff. I got 50% of my monthly pay. Okay, good. I'm stockpiling cash and remaining patient. I concur with that. Kept cash on the side. That makes sense. I can a tough balance being in the accumulation phase of dividend investing and having discipline to hold cash. Right on. I think GW says it right. Guys, don't get me wrong, man. I don't care if you're working with, 7 figures, 6 figures, 5 figures, or 4 figures. Okay. It doesn't matter. It's all relative across the board. Here's the thing. If you're working with a 4-figure portfolio, if you're working with $5,000, for example, you need to toughen up a little bit if you're going to come to me and say, Ryan, should I pull all my portfolio out of the market right now? I think we're going to have a downturn. I'm probably going to tell you need to toughen up a little bit. Okay. If you're going to be an investor, you have to understand the relativity of your portfolio, your age, your tolerance, etc. If you're in your 50s and you're sitting on $750,000, your situation may be a little bit different than the 20-year-old who comes to me and says, Ryan, I invested $500 and I'm up $250. Should I take that $250 out in profit? Seriously, I get questions like that all the time. And they're coming from a very genuine place. They are. And it's okay. There's a right answer to that. But it's just indicative of somebody who hasn't gone through the conditioning of the stock market of watching their money not only appreciate, but also depreciate in value. Super important on both sides of the house. And I just don't think there's a lot of people out there that have been really, really seasoned on the depreciation side of the house. All right. All right. Agree. We should have at least 20% in cash. That's where I'm at right now, actually, is 20. Cesar Nunez is, I've got 70 equity. This is the investable cash. My cash is much, much more than 20. The positions, the portfolio video that I came out with disclosed this very thing, and it was 49%. That's come off of that 49% to dab, but I'm fairly certain that I'm well over 40% in cash right now. I'm fine. I sleep easy. I'm fine. It'd be fun. It would be fun to take all my money and invest it all. It'd be fun. It'd be really fun. I don't have that kind of tolerance, nor would I subject anyone to that level of risk tolerance that it would take to hold a portfolio that I could build, a super portfolio, no doubt, but it would be indicative of a portfolio that would be appropriate for somebody that may have seven figures of other assets. They may have other assets via property, via precious metals, etc. And they have never invested in the market and they want to build a stock portfolio to supplement the rest of their assets. Now we're talking. But if the 350 or the 500 or the 250 is like the bulk of your net worth, you're going to put all of your eggs in the stock market basket. Do what you got to do. Do what you got to do. I won't. No way. I don't invest that way. I don't build wealth that way. No way. Forget it. I'm looking for other avenues right now. I'm looking at real estate. I am looking at precious metals. I am looking at building cash because I think the stock market is good. Now, I have a few hundred grand in the stock market, so it's not like I'm not invested at all, but I'm aggressive in other areas of building wealth right now. I am. I'm looking at building my YouTube opportunity, as you can tell every night at 7 o'clock. Ding! All right, the independent investor's got a new video on. Ding! Every night on that daily upload schedule. But anyway, I think you said it well, GW. I really appreciate you, man. That's cool. Buy value, buy on sale. The value that I pushed out there, Cummins, Prudential, MetLife, ticker symbol DAL. I've never owned an airline, but I think that's Delta Airlines, right, guys? DAL. I've never owned it. It's one of those sectors that I don't like. Subsector. I don't like it. It's up there with casino stocks for me. I just don't like it. Cruise ships I've never owned, but I think I would probably dabble in the cruise industry before I dabbled in anything else. Royal Caribbean would be my choice. But I do own Disney. They obviously have a cruise line. Yeah, General Motors, Goldman Sachs really is probably my favorite financial that I don't own for sure. Morgan Stanley right behind them, and I own the rest of them. So anyway, all right. I've been buying SCHV, large cap value. Right on, Hector. I appreciate that. I've got Sith Sloth. That's awesome. Ryan, where should we park our emergency fund cash bonds? Geez, I get this question all the time. It's a really good question. You're asking the wrong guy too. I swear. You've come onto the Independent Investor channel and you've got me telling you to ask somebody else. No, I'm just kidding. I'm guilty of this. I really am. And some people are like, come on, Ryan, why don't you have your monies in CDs? Okay. CDs, first of all, will tie up my money and make it illiquid. Okay. So if I get a 40% haircut and my money is sitting in CDs, right? It's tied up and it's illiquid. I can't get it. Okay. So the liquidity of my money is worth more than anything. Does that excuse the fact that I'm losing 2.2% to inflation every year? No. Okay. I will take my verbal lashings. I will. I'm a bad boy. But the liquidity means more to me than anything. Now, are there some certain strategic things we can do? Yes. High yielding money market is a good idea. I do have the 20,000. That's it. That's just a drop in the bucket. That's 9% of the invested capital. Much more than $100,000 just in cash on the side. And I will say the majority of it is in savings. I'm sorry. I know I'm a bad boy, but there are some killer options out there to get between 2 and 3%, more toward the 2% mark. But is it really freaking worth it? Good grief, guys. 100 grand is going to render me $2,000 a year. Are you telling me I can't? I mean, I've made $15,272 this year just trading, and I trade with a hell of a lot less than that. I never swing trade with that much money ever. It's always just a block position, which is 10 shares, 15 shares, 20, depending on the holding, right? But geez, from a relative perspective, taking that much money and moving it into, let's say, a betterment, yielding me 2.22 right now, right? So I'm keeping pace with inflation. I get it. That's wonderful. If I do get a downturn in the market, I'm going to have to transfer it out of there. I'm not going to be rendering that anymore with the sake of making that better capital appreciation on an upswing from an opportunistic buying perspective if the market dips. So that's a long answer. I understand. I've started the 20,000 position in the ETF bonds. I really enjoy owning those. I really do. This is the only aspect of the portfolio that was down today. Obviously, bond rates went up, bond ETFs go down. Yes, but but I'm okay with that. I get paid the dividend on it. Year over year appreciation is pretty darn good. I like the dividend reinvesting that I do. I think I own 7 of the ETFs off of Vanguard. Lots of overlap. I don't care. It's fine. Some pretty good exposure to the shorts, intermediate, and long term bonds. I may just throw an extended duration in there. Why not? Why not? I'm waiting for it to come back a little bit because extended duration has just been one of the top trades of the year, actually. If you caught that wave, I did. I did. Easy. Easiest $2,000 I ever made. Easy this year. Uh, but now the bond rates are going up. The bonds are coming back certainly, and with the market starting to appreciate, bonds are taking a little bit of pullback. That's fine. I can add to those if I get too violent of a pullback. But that's a super, super good question. It really is. The politically correct answer that I can give you is to seek out those high yielding savings bonds that's rendering you as high toward the 2.5 to none of them render 3 without being suspect, but 2.20 to 2.5 is a hell of a lot better. Bank of America, man, those guys are a bunch of freaking weasels. They pay me absolutely hardly nothing to keep a lot of money with them. They're really sad. And that's part of my angst with them. Somebody dropped in here, collect that terrible 1.9 at least. And that's why I say I'm a bad boy. I get it. I should at least seek that out, but I'm not currently. But it's a part of the portfolio that I'm absolutely looking at. So, really good question. I hope that helped you. You want to try to get as much as you can off of that idle cash, but don't substitute the strategic goal that you might have for that cash. My Sleep Easy cash is there to be accessible in the event of an emergency, the event that I need it in case of an emergency, in case I need a strategic buy. I fund the Roth IRA with that money from the savings. So, it does serve some purpose. And I know that's not justification enough, but that's my answer to you. It's a really good question. All right. Eric Weber, yeah, I've been looking for better hidden, but just been so busy. Okay. Hidden freedom investing buy rumor, sell news usually always works. Yeah. No kid. I know. I really should have went with my gut today. I really should have, but I figured, yeah, no, we're good. We'll hold off. We're already up huge, but yeah, just vaporized $1,000 in like 25 minutes. So it was fun. Wasn't quite as fun as Las Vegas, but it was fun. Anyway, still into up 2 grand. So traditional IRA gives you tax advantage off the amount you invest this year. That's correct. You get to reduce your taxable income. It's another way of saying that. Unfortunately, you get stuck with the minimum distributions at 70 half later on in your life. It can be very, very favorable to you as well because that tax that you'll pay on that will be at the effective rate later on in life, not the marginal rate that you pay now. So it can be very beneficial. I just always contend that you don't really know what that effective rate is going to be down the line. So why not cap it at 0, which is what the Roth allows you to do. All right. All right. Canine. Thank you, Matt. I appreciate you answering that question for me. Good stuff. I went for some quality stocks this week at Pepsi, Waste Management, Costco. 3 big ones. I own all 3 of those as well. Yeah, and I agree. They're really good. Costco, I'm not excited about the valuation. Waste Management is another industrial that I don't really mention very often, but it's a company that I had to own, and I just was like, to hell with it. I'm going to buy it, and I did. Didn't get the greatest entry on it, but I'm up. I'm up in waste management, and Pepsi has been probably my number one performer this year. It's been very, very good. I just did the portfolio review before I came onto the live stream, and evidently Apple is my best performer of the year this year. But Pepsi's been doing quite well. UTX has been doing quite well this year. Some of the bright spots in the portfolio right there. Yep. Thanks, guys. So why do that over the 401k? Closed-end fund, good buys, great comp. 401 has to be company sponsored. That is correct. 401k comes through company sponsors, usually comes with a premium as well. There's some really good 401k sponsored programs out there, but there's some bad ones too. You got to really be selective. The ones I've seen that are sponsored by Vanguard are pretty good, but you just got to be kind of careful. You can really introduce some expensive 401ks out there. So who does not work on W-2 and get taxes taken out? Okay, I'm taking off. All right, Aaron. Yeah, that's right. I've already come to these. Probably getting to the end of the live stream. This is where I start to lose my mind. So that's good. You get my full effort every single week. A lot of money leaving utilities. So I actually had that earmarked to talk about tonight as being one of my sectors. Anybody who's invested in utilities for the last 5-6 months is up. I'm up big. Utilities has been a wonderful place to be right now, but I think with the risk on, and if they're able to extract some positive news from this, it's going to be risk on again, and you're going to see some of those growth start to pick up. Some of the defensive plays, staples, utilities, look for those to underperform, I think. So I think you're right on, Hector. Thank you for share, or Louis Serrano shared that comment. I think you're right on. PCG utility, blah. It is terrible. Oh my God, the hell, man. I think they still got a fire even though they cut the power. I'm thinking of adding one share of Cisco on Robinhood. Yeah, I'm in some deep water right now with Cisco. I'm actually thinking about doubling the position. Why not? There's another fire in LA County. Yeah, it's Greg mentioning that. Huge company too, well known. Size, still want that J&J at 125. All right, happy hunting. I hope you get that entry. What do you think Citigroup is going to do? I think it's good. That's one of my valuation plays. Trading at 8 times earnings. Tangible book, it's worth it across the industry. It's not really that great of a metric because every one of the financials are trading at a fairly good discount right now, and they've just underperformed. So it's really hard. It takes a little bit of contrarian perspective to justify buying these. I've owned it for a long time, and I'm happy to own it. I will not sell Citigroup. I like JP Morgan. I like Wells Fargo. I like Bank of America. And I like BlackRock. That's my financials exposure right now. Just to disclose, there might be, well, there's a bunch of regionals, obviously, and I own the major banks in Canada. But Toronto Dominion and Royal Bank of Canada, those are also part of my portfolio as well. But I like Citigroup right here, no doubt about it. I think from evaluation, I think you'd be okay picking up and getting some financials exposure with Citigroup. That I did. I'm happy to own the stock. It's good. All right. Escape to Rocky Mountains of Seal. Probably saved over 100 grand in taxes in 13 years. Awesome. California just sucks you dry. Microsoft is a cloud play now. Oh, most definitely. It's a premium cloud play. There's a lot out there. Oracle is up there. My favorite is CRM, Salesforce, Adobe, and Amazon as well, right there in the cloud. Some others as well, a bunch of others actually. Agree, Apple is forever the best product, and everyone loves it. Cesar Nunez offering his comment on the Apple. That's cool. All right. Microsoft hardware is low. Their priorities. I'm a developer, and they have the best IDE and development tools in the developer market, Visual Studio, and they have the second best cloud, Azure. Thank you, Jason, for your insight on that. He's an expert in this category, so appreciate those. All right. Just kind of cruising down, making sure I got it all. We're going right on. We're flirting with 2 hours here, guys. Want to make sure I got their financial foundations. Can't go wrong with either Microsoft or Apple. Apple is a cornerstone of my daughter's portfolio. Awesome. Did you take any profit in Roku? I think you're talking to Lydia there. I think Lydia took profit back around 90. She's probably kicking herself. She didn't wait till it was 175. I don't know. Maybe not. I'm just kidding. It was that was a hard stock to hold, no doubt, all the way up and then all the way back down to 100. And here it is, settled in at 120. So interesting stuff. Store the gold and silver in Iron Mountain. Exactly. That's one way to do it. I did not mention. I own 7.5 of gold. It's not an investment, but it's a good defense strategy. I agree. Cesar, appreciate you sharing that. You broke my number one rule of letting everybody know that you own gold. I'm just kidding. It's a pretty good group in here for sure. So I feel like a real investor with M1 because of fractional shares. I own most of my favorite stocks, or at least a piece of them. Absolutely. Lots of companies. That's the one benefit of M1 Finance that really stands out. I would add to that and foot stomp that observation, and that you could have those pies within a Roth IRA with M1 Finance. Very, very powerful. And we'll start to see some of the renderings from the portfolio reinvestment, not the dividend reinvestment that M1 Finance offers. So just an all the way around interesting way of investing. And I think if you invest passively, the 1030 buy point that they offer every single day isn't so bad if you're just investing on a normal schedule and you're not trying to buy in and out with M1 Finance. So you're going to be really frustrated if you're trying to do that. All right. I just opened up a Robinhood account. It's great, and they will be offering 2.5 interest. Yep, that's awesome. I'd like to know a little bit more surrounding how you're using the product. If you're using it as a taxable broker, as a layer to your total overall portfolio, that's awesome. If it's your primary account, you got to be a little bit more close to the vest with how you use that product. Make sure you're not trading in and out of stock, creating a bunch of taxable situations by doing so. All right, but it can work for anybody. It's just how you use that. It's a very powerful program. It's very powerful to be able to pick up your iPhone and just buy stock after you download the app and fund the account. That very, very powerful. All right. And it's how you leverage that power that's going to render you success, or create a headache and a nightmare for you. Okay. So just be careful. You ever try to manufacture profit in your TSP? That's the first time I've ever been asked that, Sean. Thank you. I know there's groups. There's people I work with that do this. They're part of clubs like sell the C now and sit in G and this and that. I don't. And here's why. And this may make sense to people. It may not make sense. My TSP is the very account that I abide by the very, very strict rules of funding and passive investing. What I mean by that is I don't touch them. I don't touch them. I let them go. I fund it on a schedule. I don't even strategic buy the account. I fund it with what I can. 10% of my income goes in there, and I don't even really monitor the account. And that kind of allows me a little bit more justification if there is any to be had, with how I treat the other accounts. I'm a little bit more aggressive if I want to take if I want to manufacture profit in the other two accounts. I will do so because I know that the fundamental approach to the other one is intact, and I'm doing what I'm supposed to do, at least along a fundamental perspective. And I can rest easy being a little more aggressive in the others. That's a really cool question. I've never been asked that on the channel. Thank you. That's cool. Walmart is really doing great with groceries. That is correct. Walmart is pursuing the e-commerce. Personally, I like Walmart long term. Absolutely, 100%. Really good. Can't wait to see how Robinhood's money management works. For sure. I love dividend stocks. It's a heck of a comment. I like it. Got to make a donut run. Be back in a bit. Very cool. Just listening tonight. The one and only Doug Whitaker. You do what you want, man. It's kind of cool to see you pop in here. I really appreciate all the support over the years, Doug. I really do. Thank you. I hope we helped your friend a couple weeks back as well. I spoke with him directly. I called him, so it was cool. Anyway, interesting information, Greg. Love the long vids. Good. I hope some people do. I think there's these things get pretty good reception after we upload them to YouTube. So I think a lot of people appreciate it as well. I love doing it. I really do. Live streams are fun for me. I'm in my element more than just doing the 10-minute blah blah routine thing. This is way more fun. So Robinhood allegedly was the impetus for no fees, and Fidelity is the latest to join. But we all know Robinhood sells trade data real time to the clearinghouses. So will Fidelity follow? Yes, they both do that. They do. It's just the amount of egregious adding of pennies of lot to lots before they go to the clearinghouses. Okay. This is just one way of them making money. Now, whether or not they'll increase those percentages on those big orders to generate more capital to supplement the free trades, I don't know. The interesting part about it is Fidelity, as long as with my broker and TD and Merrill and all the big those folks are subject to some pretty intense audits, you know. So I know Robinhood is queued up for IPO, and it'll be interesting to see, but I won't be investing in it. Maybe that's a big mistake. I don't know. But if it's not a publicly traded company, what's going on behind the scenes? I don't know. Your guess is as good as mine, or the research that I was able to do and find that it's upwards of 60 times more than some of the larger brokers, which are around 10 to 13% of a markup on the large blocks of orders. The individuals aren't going to see that. It's a fraction of a penny. So it's like Office Space. Superman 3. All right. Good stuff, man. Going for a beer run. That's the bet. Yeah, I can't compete with that. So don't invest in anything to do with Blizzard. Company has officially destroyed itself with one word. Wow, that's interesting. That's another area. I've got Omega in the group here. It's an interesting comment. And just like a lot of those sectors, you're not going to be able to invest in every sector. Gaming is one of those that I don't invest in. I just think, God, the technology. And now I would invest in NVIDIA. So I don't want to be a hypocrite. But as far as a gaming company, I'm not attracted to that. I think things can change so rapidly. I think they have a very narrow moat. I would rather invest in laundry detergent, honestly, than I would a gaming company. That's interesting. You mentioned that. Thank you for your insight. I do not like Blizzard for many reasons. Not sure what they said. I'm not either. I don't follow the company. Selling your trade decisions real time to brokerage houses is unethical. It is. I would never use Robinhood. They are taking advantage of the individual's investor big time. Um, yeah, yes, well said. That was the purpose of my video, and it pissed some people off. That's fine. Some is the unethical aspect of the services that are rendered to the investor via being an easy platform to use, etc., free access to the market, even though you are paying a slight premium. I know there was some comments on there to use limit orders instead to ensure you're getting the price, etc., that you demand, and not just putting it out there on a market order. I buy most of my stuff on market orders, guys. Okay. It took me 2 hours and 8 minutes and 350 videos to finally disclose to you guys. I don't care. When I want to buy a stock, I buy the stock. I don't screw around trying to get this perfect price. I've never really considered that to be a jarring aspect of my approach to buying stock in the market. I think I more than make up for it with my strong moves in the market, and I don't really try to nickel and dime it. I don't. When I want to buy it, I'll buy it. Um, but I think it's the market orders really that subject that order to further scrutiny because it goes to be cleared behind the scenes, and then that type of stuff is what's happening. But the unethical piece that you talk about, Andy, in your comment, that's good enough for me to not invest. It isn't. And I think a lot of people were arguing from a perspective of, I'm happy with the platform. They've been so good to me. I think we need to have a little less loyalty to the conduit that provides you access to the market. I do. You don't need to be so cult about it, for lack of better terms. You don't. Okay. They don't owe you anything and you don't owe them anything. If you're unhappy with their service, kick him to the curb and go research the 25 others that are waiting in line to win your business. That's simple. All right. Andy, thanks for that comment. That was really sharp. I agree with you. Thought it was 3 to 4%. They banned a very popular streamer who won money at the oh, interesting. That's cool, Omega. Thanks for sharing that. Not the first time. Yeah, Activision Blizzard. I'm not using Schwab at the moment, debating if I should keep M1 Finance. Yeah, so this deliberation is going to go on here. I'm going through it right now. I really am. The only real reason that I'm sticking with my affiliates at this time uh, is because M1 Finance offers some really, really cutting edge stuff. It really does. And a lot of people invest with M1 because they really enjoy the platform. Um, I don't think it's that simple to use. I think it's got some real deficiencies, but I really think it has some real positives to it. That's great. As long as people render my recommendation that they look at the prospects of using M1 Finance for what I feel like it's best to be utilized for, and that's passive investing. Whether or not you buy single stock, partial shares can come into play, passive investing to where the single buy point per day or single sell point every day. That just pisses me off. There's no reason to accept that level of lack of service. And that's coming from a guy who is dealing with a full service broker every single day. I can go in there after hours anytime. I can buy a stock. I can buy after hours, during hour. It doesn't matter, free of charge. So when I come to a platform like M1 and I put in a sell order at 11:45, and that's not going to sell until the next morning at 10:30, get out of my face. That's horrible. But my criticisms are real. I don't shy away from those. I just think there's a lot of positives that turn a lot of beginning investors on. Now, if you get up, I used to say if you got up to a certain incentive threshold with an M1 finance, that you could transfer that over to a major broker, and that's gone away now. You can just start with a major broker like a Schwab, TD Ameritrade, Fidelity, E-Trade is on the camp now. You could research those and really try to put your mark down on a broker that you may potentially be for the rest of your life. And that's really cool because you can get familiar with everything and really educate yourself up and really internalize all of the benefits on the platform. It's really powerful. So yeah, I don't know. For a lot of people will stick with M1 Finance because they're very loyal. They like it. That's fine. But to each his own. Okay. You're not going to hear any disrespect from me if you say, you know what, this might not be for me. This looks a little bit more attractive to me. It's going to be a little bit of a pain in the ass to get the rollover from that old account to the new one. It takes about a week to 10 days. I've gone through it many, many times. I encourage you guys not to be scared of that process. Go through it if you need to. And I think you'll be better off on the other end by seeking out better service. All right. Cool. An acquaintance of mine just got a job to write the software for a new quant firm in San Francisco. Wow, that's crazy cool. Software will be the tie-in that markets from their firm. New firms keep popping up. Yeah, keep me posted on that. That's pretty cool. Thank you, Andy, for sharing that. That's awesome. We do have too much faith. That's for damn sure. Exactly. It just irritates the hell out of me. It's as if there's like an alternate world out there. And that's why a lot of people tune into me and they're like, this guy's not fake enough, man. Unsubscribe, man. This guy's a joke. You're right. Ole, see you later. I don't need you on the channel. You expect me to be something I'm not. I can't do that. I'm incapable of such things. Sorry. I try to be as entertaining as I can because I know people don't want to be like coming onto a live stream and falling asleep for 2 hours, but this is who I am. Yeah, I barbecued some hamburgers tonight. Yeah, and that's who I am. I was the same person when I was over the grill. All right. My YouTube is like my investing diary. It is for sure. Word trade window makes me want to smack him one. But being able to buy stock I normally could not, I could not afford, excuse me, not stock I normally could not afford is useful. Yeah, I agree with that. And a lot of people feel that way, would never be loyal to B of A. Yeah, there's a lot of people that hey, they irritated me in the first couple years I was with them, and yeah, I've had a few back and forths with. I'm not afraid to give it to them. I'm not. I've brought probably 2.5 million in account value over to them and got paid nothing, which is fine. I'm a happy customer. I am. I'm a happy customer. I don't mind making that referral, but it's like, really, y'all are crazy, man. It's all about the bottom line. Nice wording, foundations. Yeah, they will level up for sure. Just getting accounts set up again is time. It is. It's a pain in the neck. You got to do the renderings for them, and it's easier if you do a like in kind transfer, and you don't have to liquidate the assets before transferring, and that's an easier ask. But it's a pain. I've done it multiple times, and I don't really want to do it again. I'm relatively happy with Merrill. I am. So I don't think I'm smart enough to get involved in the market. TBH. I mean, I'd love to, but me and math don't really get along very well. Yeah, so Omega, I think you're overthinking it, man. I'm actually very good at math, but as far as investing goes, it's all about your psychological approach. It is. Pick the account. Try to determine what type of investor you would want to be. And if you have surplus capital that you want to get more out of, the stock market can be that avenue to where you become a participant via certain investing vehicles. It's not like there's thousands out there. Now there's thousands of stock, but stock is one subheading. ETFs is one. Index funds is another. Mutual funds is another, but I kind of just throw that away. So you got stock, ETF, index fund. Okay. Stock, ETF, index fund, and none of those are going to be discussed if you go into a financial planner and sit down with them and say, I have $10,000 of surplus capital. Can you help me? And they'll say, sure, here's 4 mutual funds for you, that of which I'm going to get a kickback for, and I'm going to charge you a high expense ratio per year. I'm going to charge you annual fees. I'm going to charge you every single month to invest your money in these mutual funds. Thank you very much. It was so nice to meet you. We'll see you in a year. That's going to be how that rolls. All right. Investing is easy. Becoming a participant in the stock market is really not that hard. It's not. You don't have to analyze things to the point where you're trying to find a needle in a haystack. Okay. Um, Blue chip companies really that you invest in, set up for dividend reinvestment can really, you're not going to notice right away when you start investing, but they really do start to grow from a seed into something very special over time. They really do. And most of the blue chips, when you look at the historical performance, it's off the charts. It really is. It's amazing the amount of return on investment that you look at by just looking at prospective companies like Home Depot, McDonald's, stuff like that. The list goes on, but it's really not that difficult. The real key on my channel is very, very simple. If you haven't caught the drift over 2 hours and 17 minutes, it's to cut out the middleman. It's to find those strategic products or accounts that allow you to direct connect to the stock market. And that way, the investments, whatever you choose to put in that investment account, whether it be single stock, ETF, index fund, etc., whatever it is, you take that level of risk. And the level of risk that you put forward, you will get paid back every single thing that you have coming to you. Now, it's the idea that if you lose money, you're responsible. If you make money, you're responsible. Well, here's the thing. If you make money with a money manager, they're still going to take their 2 or 3%. If you lose money with a money manager, they're still going to take their 2 or 3%, right? But as a self-directed investor, you keep 100%. You don't share it with anybody. If you take losses in the account, these folks over here that are managed, they're still taking losses in the account, but they're also paying that 2 to 3% that's guaranteed to the money manager via contract that they've signed. They've opted into the disclosure. That's the key of the independent investor channel in a nutshell. It really is. If you heard me, it's a gold mine. It is. I mean, I'm making myself independently wealthy by following this program. It's that simple. Just looking to share the message over a Yeti of green tea. All right. My big emotional hurdle to switching is convincing myself to sell and buy and sell regardless of the changes in the market. That's okay. I take trading positions and I sell for profit. There's no problem with that. You're not gonna hear any criticism from me, no doubt about it. At Omega, keep watching Ryan's channel. He has great advice you can use to start your investment journey. Yeah, I think I really kind of drill down on the fundamental aspect. I know there's a lot of people on YouTube, and I don't mean to impugn. I like the ability of lots of people to come on and stoke up energy about the investing topic. I really do. But I think unfortunately a lot of people fall short of getting the message through in a way that people understand that their focus shouldn't necessarily be on the Apple computers and the Microsofts and the Wells Fargos and the JP Morgan Chases and the Pfizers and the Mercks and the et cetera, through 3Ms, the Caterpillar. It shouldn't necessarily be the focus. It should be the nature by which you seek that exposure out. That should be the focus. And a lot of people are ill-equipped to explain this because they don't do it. A lot of people do it, but they don't know that they do it. And they don't really understand the difference between an old school way of investing, always going in, seeking out your exposure through a financial planner. Why? Because there's an Edward Jones on every single strip mall in this country. You wonder why they have 11,000 offices in this country. You wonder why there's a commercial on TV every single second of every single day talking about, oh my goodness, it shows somebody sitting at the table and acting like they care about their customer, right? It's all garbage. It's all smokescreen, man, every single bit of it. They are not buying a hybrid version of the stock market that you have direct access to if you're just willing to walk that road. All right. And we're looking to define the road on the Independent Investor channel. And the irony in the whole thing is the self-directed path doesn't provide any type of financial incentive to the financial institutions. They offer the products, which is ironic. Okay. Um, and that's the irony in the whole thing is you're never ever going to see a commercial on TV that says you can open your self-directed investing account and invest on your own in the stock market and render so much more by saving on all the expense we traditionally charge. They'd be shooting themselves in the foot, right? So, but I really appreciate that comment, man. That's really cool. I'm going to try to wrap it up within the next 8 minutes or so. People are starting to get tired and go to bed. I'd like to do the same thing at some point, but I've got some killer comments at the bottom of this. I wish I could have these comments at the top end of the thread. So if there's anything for the folks that are still in the group, which there's a bunch of people in here. If you guys know, I put this on Friday evening Eastern time. Okay. If you guys want to strike up a dialogue, come on, leave those when I get that. I usually post it a couple hours early. And if you can kind of give me some content to work on a little bit earlier on in the thread, because this is typically what happens is it gets so busy toward the end of the thread. I could go on for hours because this is all really, really good. Wells Fargo is bleeding me with their fees. And yeah, I've looked at this. I've had people reach out to me directly and they're like, Ryan, holy crap, man, is this right? And I'm like, oh my God, that's nuts, man. Exactly. And in her particular case, she took the portfolio like in kind and transferred it to a self-directed account. The financial planner was pissed off. Thanks for the work. Seriously. Yeah, man. Built a phenomenal portfolio, man. She showed me her portfolio. I was like, this is legit. I wouldn't change a thing. It's awesome. bunch of quality, dividend paying stocks, great dividend portfolio, had some growth built in there, no problem, right? There was nothing there to change, nothing. So she just did a like in kind transfer, which extracted every single bit of the fees that she didn't know that she opted into when she sat down and didn't have those fees disclosed. Now, most financial planners meet their legal obligation by providing you the opportunity to go and either download their disclosures. Okay, you can find the disclosure for every major brokerage house on through Google. You can find every single one of them. The fact of the matter is, nobody reads it. Nobody, right? We're all guilty of it. We don't read that crap. Try reading it. It's an eye opener. It's amazing. All right. And she was one customer out of tens of thousands, hundreds of thousands of people who go in and they sign up and they think that they're doing the right thing. She was making great income, single person. Actually, she was married, no children. Okay. And opted into this program and wanted them to build a phenomenal portfolio. They did. And they were charging her an arm and a leg. And she initiated that transfer. And it was not a good day for them. They put in a lot of work for that. And they got paid a lot too, no doubt. So my sympathy only goes so far. Yeah. But I was happy for her. She found a better avenue for herself, self-directed, put that portfolio into a self-directed account, and now is enjoying the benefits of an awesome portfolio. And it's liberated to grow the way that it was supposed to grow. Yeah, it's good stuff. All right. There are a lot of educational materials on the web, like the Buffett's books, Academy, basic courses, all free. Exactly. That's awesome. Long-term investors, that's what we are. Agree so much. Awesome, man. So, stock market investor guy by GK. So some cool folks in the group here tonight, guys. 2.5 hours, man. I will sign off. It's been a really enjoyable live stream. 67. We'll be back next Friday. Absolutely. Strike up the discussion. I'm sure next week we'll have a lot of deliverables in the stock market. Have a lot to talk about next Friday. Really appreciate again the channel creators and all the loyal subscribers that have made their way in as usual. Really appreciate the support on the channel. We'll keep pushing the message with an emphasis on awareness to the stock market. Remember, the theme tonight was caution as well. I think anybody can always benefit from always coming back, not getting caught up in the euphoria of the market, and always taking a cautious approach to your own personal application of the stock market. Very, very important takeaway, guys. Thanks so much. Enjoy the weekend. We will catch you next week. All right. Take it easy, guys.